Hello and welcome to another Maine SBDC webinar. My name is Kelsey Reardon and I am with the state office hosted by the University of Southern Maine right in Portland. We have another Maine SBDC at USM business advisor today, Christina Adleifson. So Tina is going to be taking us through the startup checklist. So if you are brand new to small business, you are in the right place. If you're not familiar with the Maine SBDC, we are the Small Business Development Centers, and we're a national program. So each state has centers, and each center has advisors, and we provide confidential, no-cost business advising. So the fastest way to get into our system is this orange button on our website that says request advising. And so later on today, I'll be sending out a follow-up email with a link to today's recording as well as the slides. So all of the clickable links will be accessible through there, but all of our contact information will be in that email as well. So you'll be able to request advising through there. If you have any questions today, go ahead and stick them in the chat. If we don't answer them along the way, we'll definitely have time at the end to go through them all. And also, if you have any future questions, feel free to respond to any email that you've ever gotten from me, and it'll end up in the same place. So Tina's email will also be in my follow-up email, but feel free to reach out in the future as well. But otherwise, I'll pass it over to Tina to get started.
Great. Thank you, Kelsey, and welcome everybody to the Startup Checklist. As Kelsey said, my name is Tina Adleifson, and I am an advisor with the SBDC. I work out of the USM campus with Kelsey, and I cover Cumberland and York counties. Before I did all this, I was a business owner in Down East Maine. I owned a busy restaurant and inn with my husband, who is a chef, and we did that for about 12 years. Before that, I got myself an MBA, and I worked on the business side of large nonprofit organizations where I was a finance director and an HR director, and also worked in marketing and fundraising for those organizations. I loved business ownership because I was learning every single day. And I'm really pleased to be in a position where I can help other people navigate that process. And as Kelsey said, we're an organization that provides confidential, no-cost business advising services to anybody along the way of their entrepreneurial journey, whether you are just thinking about it or you are ready to exit. And these are just some of the topics that we advise on. There's many others. One thing that we are not are lawyers, accountants, and tax preparers. So there will be times when you need the advice of a professional, and we will talk to you about when that time is. We can help you understand a lot about business ownership, but every business at some point is most likely going to need a lawyer, an accountant, and a tax preparer. So the other thing I wanted to say is that this webinar is an overview. We're going to be talking about a lot of topics. And really the point here is to get you familiar with the topics so that you can explore them in greater detail. We have many in-depth pre-recorded webinars on our YouTube channel, and many of like a single topic, we actually have an entire webinar on that topic. I have at the end of this presentation a list of some of the ones I think might be most useful to you. But really, the purpose, the learning here today is to introduce you to these topics so that you can explore them more deeply. But what we are going to be talking about is starting off with two really important topics, which is doing an assessment to make sure that you're personally ready for business ownership, and also the importance of feasibility studies, business planning, financial projections, before you launch into the technical topics, which is where many people actually come to me the first time as a client, and they want to talk about permits and business entities and taxes. And we are going to cover all of that today, but so critical that you actually set yourself up for success by looking and digging deeper into whether you're personally ready to do this and whether the business idea you have is ready for the marketplace. So we're going to touch on those topics, but I just really want to emphasize how important they are. So in thinking about whether business ownership is right for you, one thing you want to be really clear about is your motivation and the mission behind what you're doing, because at various points, this is going to be a really hard job. And you want to make sure that you've got something that's motivating you, that's going to keep you going through the hard times, like a global pandemic. As I mentioned, we actually have a webinar just on assessing whether this is right for you. And these are some of the topics we cover in that webinar. You also want to make sure that you have a real clear understanding about your personal financial needs before you launch a small business, because some businesses take a while to get to profitability. And it's important that you know how much money do you need to live on, what benefits might you be giving up by leaving a job. And sometimes by going through this exercise, you realize it might be a smarter path to take is to do your business as a side gig. Start it off as a part-time thing while you do a part-time job, and then see how it goes and how it grows. Another topic you want to think about is your industry experience and your business experience. I've had people come to me who want to open businesses in industries where they've never worked. And while I won't tell you that that is impossible, it could be that your best next step is going and working in the industry first, so you can really understand the industry and see if it's really the right thing for you. When it comes to business experience, the other thing to understand is when you open a business, you're going to be doing the work of the actual business, and then you're going to have this whole other job of running the business. And that means dealing with topics like marketing and financial management and financial tracking. And if you have employees, there's all kinds of things you need to be doing to manage those employees. So business experience, a lot of these things can be learned with the assistance of the SBDC and other people. But you really want to make sure you understand what those topics are and how you're going to fill in any lack of experience. And that might be hiring subcontractors like a bookkeeper, or eventually, working with a professional on your marketing. But just know that it's really two jobs you're doing, and you want to assess where your strengths are and where your weaknesses are and how you might fill in any gaps. And then the final 2 points are, for most people who start businesses, it's an experience where you are working harder than you ever have before, because you're always thinking about your business, whether it's open 5 days a week or 7 days a week. You're often having to work on your business, or at least think about your business. And that can be actually a really exciting thing, because you're always learning, but it also means that you need to make sure that you're taking care of yourself, because business, a lot of times you are the business. And I speak from deep experience on this one. You want to make sure that you have a support system in place that's going to sustain you. So you have budgeted time off to do the things that fulfill you. You have people around you that you can talk to, whether it's friends and family or other business owners. It's a challenging thing to own a business, and you just want to make sure you're going to be set up for success. So the other piece, before we get into permits and licenses and all that fun stuff, is making sure that the assumptions that you have about the success of your business can be backed up by research. A lot of people start a business assuming that people want the product or service that you are providing, and you need to prove that first before you start. And you do that with research. Most successful businesses are solving some kind of a problem in the marketplace. They're filling in a need in the marketplace. So research helps you prove that that is actually the case. So you're going to research information like, who are your target customers? Who are these people? And are there enough of them in the geographic area or even just in the niche that you're trying to target to sustain your business? Investigating your competitors is really critical. Ideally, you become a customer of them so that you can understand how you're going to be different from them. What do they do well? What are they not doing well? How might you compete with them? It could be on price or quality or services, but you need a reason for somebody to buy from you versus the competitor. And you want to be really clear about how you're going to position yourself. And then finally, research is going to help you understand what trends are impacting the industry that you want to go into. There are the world is constantly changing, and there's going to be opportunities and there's going to be threats within the industry that you might want to go into. I recently worked with a client who was starting a construction company, and when he went and did his research, he discovered that a lot of people in Maine, Maine has an older population, are retrofitting and renovating their homes so that they can stay in them longer. And that he wasn't really aware of that before doing the research. So he pivoted to focus on that market. That's happening in every market. There's always something that you need to know about. And the way that you do market research is that there's two types of research. There's primary research and there's secondary research. And primary research is research that you do yourself, and it's really going to be the most impactful because it's really speaking to your specific situation. So you want to do things like visit the competition or become a client. You want to ask potential customers what they think about your idea. Once you've figured out who your target is, ask them questions. You can do that by conducting surveys online using something like Google Forms. If you have a product, like a food product, you can give out samples and ask for feedback about quality, ingredients, pricing, packaging. You also want to talk to people in the know. And if you're thinking about operating in a particular area, there are people like economic development officers who are, for some of the larger towns, people who have the job of helping to increase economic vitality in a town. And they tend to know a lot about what's happening in that town. Chamber of Commerce members or directors, your banker, and definitely other business owners. You may not want to go directly to the competition to talk to them, but if you can get connected to other business owners who are doing the same kind of thing that you want to do, that's a great opportunity to learn a lot. So primary research. And then secondary research is research that other people have done. There is so much easy access to information these days. You can start with Google searches. There are trade organizations and associations that have all kinds of data about their industry. The US just did a 2020 census, so there's some pretty up-to-date information about customers and people and where they live and what the demographics are by town in Maine and elsewhere. There are all kinds of different business databases, and one excellent source is the Portland Public Library. They have a business librarian and a business section, and if you go in there, they will help direct you to the resources that you might need. There's Department of Transportation data that tells you traffic patterns in certain locations. There's tourism studies done by the Maine Department of Tourism. All kinds of resources for getting information that are going to just better inform you about the market that you're operating in and your target market. So you've done that, you've figured out that this is the right thing for you to do, the research is telling you there's a place for you in this marketplace. So the next step are financial projections, and this does not have to be a intimidating process. Sometimes it's almost a back of the envelope process, but you need to do some work to figure out what your likely profitability might be. And you start with figuring out your startup costs. What does it take to open this business? Do you have to have money to sign a lease and give 3 months of lease payments? Do you have equipment? Do you need a website? What kind of working capital do you need, which is just a fancy term for that cushion in your bank account that everybody needs as they are starting to open, but they have expenses that are fixed costs like rent. And then you want to look at this by month because so many businesses are seasonal. So you can work with an SBDC advisor to help you figure out your revenue projections by month, which are guesses, but they are within certain educated guesses within certain parameters that you're working in. So if you want to open a restaurant, you know the size, the number of seats you want to have, and the type of menu and the hours, you can start estimating what you might get for revenue. And then you're also going to be projecting your expenses. And this is typically an aha moment for lots of people because When they really start putting numbers on paper, that's the point where they start asking themselves questions like, is this going to be worth it? I didn't realize I'd need to have so many sales to cover these fixed costs. It's a great exercise because it's like you're opening your business, but not really doing it. You can play around with the numbers and see what it's telling you. One of the top reasons that businesses fail is not managing cash flow. And that just means the money that's coming in and out of your bank account. And it can be impacted by lots of things. You may make a sale, but if you invoice customers and they don't pay you till later, that impacts your cash flow because you might need to pay your vendors sooner. Managing cash flow is really critical, and that's something that we can help you with, but you want to look and figure out what it might look like for you. And if that means you need more working capital, more money in that bank account to start. We often do break-even analysis with people, which is a really simple calculation to figure out how many sales are you going to need just to break even, and then at what point would you start being profitable. And we also work with people to project out 3 years. And I know that seems like a lot. It's not as intimidating as it might sound, and it really helps you to figure out what this business that you're thinking of might actually look like. And then the next step is understanding how you're going to finance your business. Most startups are what we call bootstrapped, which means that you're paying for it yourself. It's your personal savings, personal loans. You might have the ability to take out a home equity line of credit, could be friends and family. That is how the vast majority of startups get funded. It doesn't mean it's the only way. Traditional lenders often do not fund startups, but there are caveats to that. There are certain situations where they will do that, but you should be aware that they have some pretty conservative, stringent requirements when it comes to getting a loan. You need to have collateral, something that if you can't make your payments on the loan, it's an asset that they can take and sell and get their money back. You need to have credit scores that are healthy enough for the lender, typically in the high 600s. You need to invest your own money. That's what the capital means. No lender is going to give you everything you need. Typically, you need to invest at least 20% of your own money because they want to see that you have as much of a stake as they do. You need to prove that the business is going to have the cash flow and the capacity to actually make the monthly loan payments. And they're going to look at the conditions that you're operating in. So for example, hospitality businesses right after COVID, where a lot of people left the industry and it's been tough to find workers, they're a little less, excited to invest in a business like that. So it depends on what's happening around you. There are alternative sources. Microloans, SBA microloans are small loans that you can sometimes get as a startup. They are managed by economic development agencies in Maine, like CEI, Southern Maine Finance Agency, and they are typically small amounts of money ranging from 5 to 10 to 15,000 to help you with startup. Online lenders is increasingly popular, but I just want to point out that you want to be very careful before you accept a loan from an online lender, because there's often very confusing terms and long documents, and you don't want to get in a situation where you didn't understand that you just signed a document that said you had to pay this entire loan back within 2 years. Crowdfunding can be a source for some businesses in some circumstances. There are some grants out there. I think there's been a lot of misconception that there's a lot of grants for startups out there. They tend to be very focused on specific industries like science and technology, or for specific demographic groups like underserved populations. Investors, which is an equity investment where they take partial ownership of your business, can be appropriate in some situations. They tend to invest in companies that are going to scale up quickly so that they have a much bigger company. They're operating on a national and international level because these groups are looking for a big reward for their investment in a high-risk venture. Pitch competitions, there's actually quite a few in Maine, and this can be a way to get some startup funding for your business. So once you've been through this exercise, you can put all of that information together into a business plan, and that is where you're going to prove that your idea is feasible and create a plan that's showing how you're going to structure and launch your business and how you're going to navigate some of those challenges and opportunities. And business plans can take many forms. The more traditional formal plan is like a 10 to 20 page document that lenders often require, but if you're not going for, traditional lender money, then you may not need to have that. There's something called a lean plan, which is actually a 1-page plan, and it just is really pointing you in the process of the thinking that you need to go through. And there's places to put little bullet points, but it's not actually writing a document. There's one that I sometimes use called the business model canvas, which is another 1-page visual of what your model looks like. You may just need to put together a pitch deck to pitch to outside investors. So lots of different formats that this can take. So that's the piece that this slide is the part where people often come and say, let's talk about permits and licenses. Very important information, but I just want to reiterate that doing that in-depth planning and thinking and making sure this is right for you is going to set you up for sustainable success. The failure rate of small businesses is actually quite high, and a lot of that can be avoided by doing the steps that we just walked through. When it comes to, you do in your planning process, do want to understand the licenses and the permits that you're going to be required to have, because it could be that you're going to need to get some education to operate the business that you plan to operate. There is a state office of professional and occupational regulation, and they manage the licensing process for dozens and dozens of businesses. And most people who operate in that space understand that there's licenses that they have to have, but sometimes I've had clients who didn't know that. So for example, we all know that accountants and lawyers and architects need to get schooling and do apprenticeships and go through testing, but that's also the case for massage practitioners and people who start hair salons. There's other industries where you do need to get professional licensing. So you want to make sure you understand that. At the state level, there's several different agencies that permit businesses based on what kind of business they are. So for example, the Department of Health and Human Services does licensing for restaurants, food trucks, tattoo parlors, tanning salons, anything that might impact human health in some way. The Department of Conservation, Agriculture, and Forestry, they actually manage licensing for food products. So if you have a salsa that you're making, you get your license through them. You might need a commercial kitchen license, or sometimes you're allowed to have a home kitchen license. Obviously, if you're dealing with liquor, you need to work with the Department of Liquor Licensing, and then the Maine Fire Marshal is often involved in any kind of business where you're going to have people come together. So restaurants, any place where there's a gathering like clubs or music venues, child care centers, all kinds of things. At the local level, there are also permits and licenses that you may need to run your business. And you want to start by contacting the town code enforcement officer, because they can guide you to help you understand what the town might require. The zoning board, you want to make sure, especially if you are running a business out of your home, that you're going to be allowed to do that. Sometimes local towns and cities have the same permit or license that the state has, and you need both. So for example, in South Portland, Portland, and Lewiston, you need to have restaurant licenses from those cities plus the state. Police departments, fire departments, they also may require some kind of a sign off. So it all depends on what you're doing. And this website is one of the best places to go to figure out what kinds of licenses you need. The address is over on the left-hand side of the screen, and on the upper right-hand part of the screen, there's that little box that says, I want to, and I always choose start a business in Maine. And then what happens is a very long list of all the different kinds of businesses comes up, and I select that. I select whatever it is I'm looking into, and then they will ask you a series of questions about exactly what you're doing. And then it spits out the permits and licenses that you need. So it's a great resource to go to, and that's really where you want to make sure that you're checking. All right, so you understand what kind of licenses, you've gone through your planning process. This is the point where you want to start thinking about business entities. And this is also, again, one of the points that people actually start with, but you want to go back to those other pieces first. So business entities is the structure, is a way to think about it, of a business around you. And the decision that you make when you decide what kind of entity you want to be is going to impact your liability, it's going to impact your taxes, your reporting requirements, and even your expenses. The ones in front of you are ones that we see all the time. I'm just going to quickly run through these. So a sole proprietor is just a single person who is in business for themselves. And if you just started running your business today, in the eyes of the IRS and in the eyes of the law, you would be called a sole proprietor. And what that means is that you and the business are the exact same thing. So where that impacts you is if you were to get sued or go bankrupt, it's you personally that's getting sued and going bankrupt. So any assets that you might have, like a home, would come into play in any kind of an award. So there's no separation between you and the business. Same thing for a partnership that doesn't have another legal structure around it. If you're two people or two or more people going into business together, the liability is yours alone. Which is why the LLC has become very popular, because that is kind of a hybrid between, it's not as complicated as setting up a corporation, but it gives you separation between you as a person and the business itself. What it does is you're setting up a separate legal entity with the Secretary of State's office, and we're going to talk about that in a second. And it means that if you were to be sued or go bankrupt, as long as you've kept that separation by having separate bank accounts and not mingling in personal finance, then if you're sued or go bankrupt, then the assets that come into play are just the business assets. So just the money in your business bank account or whatever equipment you might own. So very popular. You really have to work through whether it makes sense to set up an LLC. I've seen some people do it who really have little to no risk. And sometimes, there are reporting requirements and annual fees to maintain your LLC. So you want to make sure that it makes sense for you. You can always start off as a sole proprietor or a partnership and move over to another entity later. The big daddy of them all is the corporation. Under US law, that is a separate person. So it's like you're completely separate, although there have been some lawsuits that are challenging that. But that creates the most formal separation between you and the business. It's much more complex to set up. You definitely need legal review, but that may be the right direction for you. And then finally, a lot of people come to me wanting to set up an S corporation because they heard it saves a lot of money in taxes. What's important to understand is an S corporation is not actually a legal entity. It's a tax status. And you can elect to file your tax return with the IRS as an S corporation if you are an LLC and if you are a corporation. And I'm not going to go into the intricacies of this, but once you achieve a certain level of profitability, it might make sense to be an S corporation because it helps you to limit payroll taxes to a salary that you're taking out of the business. You actually become an employee of the business in this scenario. Any additional profit is only going to get taxed for income tax purposes, and not everything's not getting taxed for self-employment taxes and income taxes. And we'll talk a little bit more about that later. But that's something you would want to work through with an accountant. And typically, I don't see people set up S corporations out of the gate unless they really understand what their finances are going to look like. I'm just going to stop there for a second. Kelsey, are there any questions?
I don't believe we've gotten any questions yet, but if anybody has them, feel free to stick them in the chat as we go along.
Okay, because I know I'm plowing through a lot of information here, so put your questions in, and if we don't get to them on the slide, we'll do it at the end of the presentation. So you've decided on your entity. Now you need to register your entity. And if you're setting up any kind of a legal entity like an LLC, a corporation, employee-owned cooperatives, nonprofits, although we don't work with nonprofits, that is all done at the state level, and it's done through the Maine Secretary of State Bureau of Corporations. There are filing requirements, there's annual reporting requirements when you set up this separate legal entity. If you decide not to incorporate and you're going to be a sole proprietor or partnership without that extra entity protection, then under Maine statute, you're required to register your business at the town level. And you're looking for what's called a doing business as form. It's a form when you start a business and the business is not you. So you're starting a business that doesn't have your name in it. And it's just $10. I think all towns, I know at least in Portland, they require that it be notarized. And just a word on naming and trademarks. When you incorporate, so you're setting up a legal entity with the Secretary of State, your name is going to get registered, and they don't allow other people to have the same name if they're in the same industry. There is some overlap where you may find some similar names, but they're operating in very different industries. So your name is essentially protected. So if somebody else started a business with the same name in the state of Maine, you could say, hey, that name is already taken. If you don't incorporate, so you're going to be a sole proprietor or a partnership and you're not setting up a separate legal entity, you can still register what's called your mark with the Secretary of State's office. And that is a form you fill out, and then you send in pictures of your logos, any materials that show your brand, and it can be registered with the state. So if somebody else starts using very similar name or branding materials, you can say, hey, this is already taken, stop using my stuff. This is only within the state of Maine. So if you want to protect your name within the United States, you would go through the US Patent and Trademark Office, and you would need to work with a patent and trademark attorney to do this. And it's before you even decide on the name of your business, it's a really good idea to do some Google searches. And then maybe go over to the US Patent and Trademark Office website where they have a database that you can look up names so that you can make sure that it's not a trademarked name in some other state. Because what can happen is if you do take someone's name and it is registered in the US, in some other state, they can send you what's called a cease and desist letter and tell you to stop using their name, which is a real bummer. So make sure you've just taken this step to research what you're going to call yourself and make sure it's not taken. All right, so the next fun thing you get to do after you figure out your registrations is get what's called an employer identification number, or it's an EIN. Sometimes it's referred to as an FEIN. You are required by the IRS to get this number if you have employees, because you're going to need to file payroll taxes. If you are a partnership, even if you are not a separate legal entity like a multi-member LLC, you're just two people, you still need an EIN because you can't report under two different social security numbers. Obviously, if you're a corporation, you need an EIN. You also need an EIN if you are in a business that pays federal excise taxes. That is very specific industries like people who sell gas and alcohol and tobacco and tires and apparently tanning salons for some reason. There's some other really random reasons that people need EIN numbers that probably won't affect you, but I list those there. If you have a KEO plan or you're taxing non-resident aliens, not through salary, but in some other way, you need to report that. Some confusion comes in when it comes to the single member LLC who doesn't have employees and doesn't pay federal excise taxes. Technically, you don't need an EIN. You can use your social, but we highly, highly recommend that you do get an EIN, because the whole idea behind an LLC is that you want that separation between you and the business. So there's no better way to do that than to have that business have its own tax identification number. Also, sole proprietors who don't have employees, a lot of people just use their social security numbers, but you should know that you can get one if you want one. It's going to be an EIN that's associated with you as an individual. And the reason some people do that is that they don't want their social security number to be out there on vendor forms or, you know, anything where other people could see it, just because of identity theft. If you think you may be a sole proprietor and eventually might form an LLC, you may want to wait on getting the EIN, because when you get an EIN, when you become an LLC, you need another EIN for the entity. So if you get one as an individual sole proprietor and then you form an LLC, I've seen that cause some confusion. But generally speaking, other than sole proprietors, most businesses are going to get an EIN. So you get your EIN, and then you need to go set up a business bank account. And when you go to do that, business bank accounts are different than personal business accounts. So you need to show your IRS tax identification number, your EIN, and the letter that you got from the IRS. You may need to show them your certificate of formation from the Secretary of State's office if you formed a separate entity. If you are a sole proprietor, you can go in and set up a business bank account with your social security number, but you want to take the copy of that DBA form with you, because the bank may need to see that to prove that you're a business. Generally speaking, certainly when you have a separate EIN, but even if you are, say you're a self-employed person, you're a consultant, technically you, in that situation, you could run your business expenses through your personal bank account, but we always advise that you still get a separate account, because it's going to make tax reporting so much easier. It's going to make just managing your business a lot easier. So really think about doing that, even if technically you're not required to do it. Okay, taxes. This is the fun stuff. Most products and some services in Maine are subject to Maine sales tax, and you get to be the lucky person to collect those taxes on behalf of the state and then send them into the state. There are some wonky tax rules that I have encountered. So if you're not clear about what gets taxed in your business, you want to look for the Maine tax bulletin that describes your business. And that is basically just an information sheet where the state helps you understand what gets taxed. And I'll use an example. I had a client who is a photographer, and she didn't have to charge tax on the photography services, but she did have to charge sales tax when she provided a product to the client, whether that was a thumb drive of photos or a website download process where people were paying for it, or physically the photograph. So there's a few instances where you have to really, understand what gets taxed. With food, prepared foods get taxed, when you go to a restaurant, but groceries don't. So it's you want to understand the rules that are going to govern your industry. So to get the taxes and to give them to the state, the first thing you need to do is register with the Maine Department of Revenue, and you're registering to get what's called a retail certificate. This means that you're the person taxing the final user of this product. And when you do that, you're going to go through a questionnaire online, and it will ask you what you think your taxable sales will be. If you say that your taxable sales are more than $3,000, you're also going to get what's called a resale certificate. And what that is a piece of paper that you take to your own vendors and say, hey, you shouldn't charge me sales tax because I'm going to be charging it to the end user. If you are less than $3,000 in sales, it doesn't mean that you are unlucky and have to pay sales tax. It's just a different process. You're going to collect sales tax, and there's a form where you then get to deduct any sales tax that you might have paid from what you're paying the state. Also, when you go through the process of getting this retail certificate, based on what you say your taxable sales will be, the estimate that you're going to give, the state will then come back and tell you how often you need to send that money over to them. It can be monthly if you have a lot of sales. It can be quarterly, biannually, or annually. And you get to, it's pretty easy to pay. You do it right online through the Department of Revenue, and you just put in your bank account money and bank account information and send the money over. Other taxes, favorite topic here. A really important one for you to understand are estimated self-employment and withholding taxes. So when you were in business for yourself and you're not an employee of your business, so you're not an S corporation, which is going to be most everybody, what happens is you report your income, you report your expenses, and you get to a taxable profit that the IRS is going to tax. And they're going to tax that for Social Security, Medicare, and income taxes. And there's no employer taking these taxes out of a paycheck. So you need to send it to the IRS, and then you also need to send income taxes, income withholding taxes to the state of Maine as well. If you predict that you're going to have $1,000 or more in tax liability in a year, then you need to file those quarterly. And if you don't, there is a penalty. Usually not a super tough penalty, but you want to be filing quarterly. In your first year of business, this can be pretty hard to predict. You can take a good stab at it and file quarterly. Some people wait and see what it looks like and take the penalty. Anything you make in net profit that's over $400 is going to get taxed. So the question just becomes, how often do you need to send those taxes in? We have a whole webinar on this topic. I have, lots of resources, articles, links to the IRS that can help you with this. But if you work with an accountant, that person, it can be really helpful, because what they're going to do is look at your taxable profit that you had, and then they're going to figure out what you need to be paying next year, because what you pay next year is based on what you did in the previous year. My accountant would literally send me the quarterly forms with a sticky note that said, send this check to this address on this date. And that's what I did. That was back when we did paper. You can do it online now. If you're an employer, you're going to encounter payroll taxes. And if you own real estate for your business, you're going to pay property taxes. So that then brings us to the topic of insurance. So most small businesses need to get insurance. The type of insurance you need is entirely dependent on what you're doing. The types of insurance you will see are commercial property insurance. When it comes to liability insurance, there's general liability policies. There's also professional liability policies, which are for people who provide services and may get into trouble with a contract. Say you're a graphic designer and you didn't fulfill a contract and it hurt the business and they sued you. Professional liability insurance can help you with that. Product liability, if you think that you have a product that could be harmful to people in some way, you might want to talk to your agent about product liability. There's all these other types of insurances that you may encounter. If you run a business out of your home, you might need to put a rider, which is basically just like an additional insurance onto your home insurance policy. If you are in a situation where your business has to stop for some reason, there's business interruption insurance. Cyber insurance is getting increasingly common. And there's also something called key man insurance, which is you're insuring a key member of your team because the business essentially depends on that person. And if something happened to them, yeah, you can get key man insurance. If you're an employer, you are required by Maine law to have workers' comp insurance, and that's insurance that covers the expenses of employees who get hurt on the job, either lost wages or medical expenses. The best thing that I usually tell my clients is to first start with an insurance agent that you know. So if you have vehicle insurance or homeowners insurance, call that person. If you don't, then there are a few large insurance companies in Maine that have special departments just for business insurance, and we can direct you to those organizations. And then what happens is you have a conversation with them and they say, what do you need? You know, what are you doing? They'll ask you all kinds of questions. They'll go out into the marketplace and find different competing policies, and then you can select to, you know, one that works the most for you. I used to have an insurance agent who came down to my business every year, and she was fantastic because I knew that if I ever got into trouble, I'd just call her. She was just my person. So you want to develop a relationship with someone like that. All right, so then the topic of hiring workers. This is a big topic, and we have other webinars. We have an e-course on this that you might want to check out. I'm just going to cover some things to put in the back of your head that you really should be aware of. So the first one I'm going to mention is contractors versus employees. A lot of businesses were notorious for hiring what they called contractors so that they could avoid paying payroll taxes as an employer. That's a big no-no. There's a whole list of questions to ask yourself that comes from the IRS and the Department of Labor and the Maine Department of Labor to figure out if someone's really a contractor or whether they should be classified as an employee. When I was in business, I had someone from the Maine Department of Labor come down and want to go through my records to find out if there was anybody there who I had classified as a contractor. Thankfully, because I had been an HR director, I knew all about this and I didn't misclassify anybody, but they are cracking down on this. And generally speaking, somebody is an employee if you are telling them when to come to work, you're providing the tools for them to do the work, you're supervising the work, versus a contractor who's somebody in business to do that work. And they provide their own tools, they have their own schedule, you're involved in the final product, but it's a pretty clear distinction in my mind, but make sure that you don't get confused about this. When you have employees, you are going to register with the IRS, that's your EIN number. You're going to register with the Maine Department of Labor because you're going to be paying unemployment taxes and managing any kinds of unemployment claims. You're going to be with the Department of Revenue because you're going to be collecting withholding taxes. And then you also need to know that when you have employees, you're required within 7 days to report new hires and terminations to the Department of Health and Human Services. And the reason for that is they are watching for people who owe child care payments, and you may be asked to garnish the wages of someone. I had to do that for a couple of employees in my business. Talked about workers' compensation insurance. And then the next thing to keep in mind is you want to use either a payroll service or payroll software. You do not want to do all of this work on your own. There's all kinds of charts and tax tables that you have to understand. There are quarterly reports that you need to send to the IRS and the state of Maine. They're called 941s. You need to produce W-2s and W-3s. It can be a full-time job, even if you just have a few employees. So at a minimum, you want payroll software. You can get that through QuickBooks. There are online payroll companies. I've had many clients use a service called Gusto or Gusto. I if you have a lot of employees, I particularly liked working locally with a local payroll company. Also, banks, a lot of local banks provide payroll services, even just for, a couple of employees. After that, you want to be aware of all of the state and federal labor laws, workplace safety laws, anti-discrimination laws, and record retention laws that that are part of being an employer. Doesn't mean you need to be an expert right out of the gate, but you have to have some understanding of overtime laws, things that you can say and not say in when you're interviewing clients, to make sure you're not being discriminatory in any way. For example, Maine has a law that you can't have on an employment application a line that asks someone what they made in their last job. That used to be very common practice, and it was determined that that really affected women, because employers would say, oh, I'm going to offer something a little bit higher, but not as much as I could offer. And it gave them an unfair advantage in negotiations, and that particularly impacted women. So that's not allowed in the state of Maine. So there's certain things you want to educate yourself on. And then generally, there's just best practices when it comes to writing job descriptions, offer letters, onboarding practices, and just generally employee management. So it's not a lifetime, but it takes a long time to be a good employer. And in the beginning, this stuff can seem completely overwhelming. But after a while, I guarantee you that you'll totally get this. This is no big deal, but just be aware it seems pretty overwhelming in the beginning. But you're not alone. And finally, I want to point out what a bail team is. A bail team, if you go for a loan, bankers are often asking who's on your bail team. And bail team stands for your banker, your accountant, your insurance agent, and your lawyer. It's a really good idea to have relationships with all of these different kinds of people, even when you're just starting out. Definitely as you progress and grow, there's going to be reasons to engage many of these people, but having relationships with people in the beginning can make it really a lot easier when you are in need of services. Obviously, for example, with bankers, you want, during the pandemic, some people obviously were unable to make their loan payments. You don't want to put your head in the sand and not talk to your banker. You want to talk to them if you're having problems, because they want to see you succeed, and there may be something they can do to change your payment structure. Accountants, many small businesses use accountants for tax preparation, particularly if you're a partnership or a corporation or filing as an S corporation. They know a lot about taxes and can help you be most efficient with your tax strategy. They can provide bookkeeping support or point you in the direction of somebody who can provide bookkeeping support. We talked about insurance agents, and then lawyers. Lawyers are there for all kinds of reasons, not just when you're in trouble over something. They can help you with your entity decision and help you set it up if you don't want to do it yourself. Maine has a law that when you set up any kind of an entity, an LLC or corporation, you need to have what's called an operating agreement inside this that governs how this legal entity is going to work. If you are going into business with someone, you absolutely want legal review of a partnership agreement before you start. If you're going to rent a space, you want legal review of the lease agreement. And if you are engaged in either giving contracts to clients, or you're engaged in being under contract with customers or vendors, then you want legal review there. And then they're also helpful when you have questions about employment law. So have a bail team. So we just covered a lot of information. And again, the point of this is just to make sure that you're aware of these things, and that you then go do the investigation you need to do to set yourself up for success. And again, working with the SBDC and an advisor can help you with all of these questions, but we also have other webinars, other resources, e-courses to help you understand and navigate many of these topics. So questions, any questions on anything? We actually have a few minutes here, so I'm happy to answer any more specific questions.
Awesome. Well, thank you very much, Tina. We do have a few questions. Nicole was asking back on the registering your entity page, do you need to register, I guess, do you need to do both? So it was the state and local and the
Yeah, no, the answer is
EBA.
it's either or. So you're going to register at the state level, then you're registered in the state of Maine.
Okay.
And you should know that there are additional requirements for setting up LLCs that an advisor can help you with, but there's annual reporting requirements and fees. You need to have an operating agreement. You need to have a registered agent. So we can help you with that.
Awesome. And then it looks like Nicole was also saying they were struggling to find feasibility studies for the fitness industry and running coaches. So we have access to some market research that not everyone has access to. So I think a business advisor could definitely help you find some more of that data.
Right. And just to clarify, you're actually writing your own feasibility study because it's the feasibility of you opening this business in the conditions that you're going to be opening it, but what you're probably referring to is the research behind that. And I would definitely recommend the Portland Public Library, and I have a sheet I'm happy to send out with this presentation on research resources, places that you can go to get online research and ideas for getting your own research.
Yeah, and we just had I think Christina Ramsdell up at Maine SBDC at AvCog do a market research webinar. So that was
our other webinars, because
Yep.
research is a big part of this, and you just want to make sure your assumptions about what you're doing match what the research is saying.
Yep. And then another person asked if their business product isn't tax, so they seem to be a chiropractor, do they need to worry about the tax information? And my response was, if you're selling any additional items in your office, so my chiropractor sells like foam rollers and the the back hook thing and some muscle creams. And so I'm sure those items are taxed. But do you have any feedback on that?
Yeah, no, you nailed it, Kelsey. A lot of times people are selling products as part of their service, so those would be taxed. But if your service is not taxed, then no, you don't need to worry about it. There are some services that are taxed in Maine. Those are lodging, any kind of lodging business, car rentals, for some reason, cable services, furniture rentals. There are a few services that are taxed, but the chiropractor is not one of those. So no, you don't need to worry about it unless you're selling a product as part of your business.
Great, thanks for confirming that. And then someone had also reached out privately to say, what do we need to engage a business advisor? Should they come after they've written their business plan and done all that research? And I would say, sure, or before, or later. We can help at any point. So arguably, the earlier the better, because maybe we can save you some heartache along the way. But our business advisors are able to assist at any point in the lifetime of your business. So starting it, ending it, whatever it is you need help with, we want to help you with that.
I totally agree. Any part is good, except for there are some caveats there.
True.
One of my most heartbreaking situations is when somebody comes to me and says, I just signed a lease, I need to get a loan. That's not a good position to be in, because you just made a massive financial commitment without figuring out if you can afford it, really, if you haven't done the business plan or the financial projections. So in terms of business planning, it's great to come in at the beginning because we have, as Kelsey mentioned, all kinds of great resources to help you with your research. But I often get clients who want review of a plan after they've written it, but just don't make any commitments, financial commitments, before you're super sure that you've got a solid business plan, solid financials, and you understand how you're financing your business.
That is excellent additional information to add in there. So thank you very much. We are after 11, so I want to be respectful of everyone's time. But thank you so much, Tina. Thank you everyone who joined. Keep an eye out for my follow-up email. The slides will be, all those links will be clickable in there, and all of our contact information. So it'll be easy for you to request advising through that email.
Thanks, Kelsey.
No problem. Have a great day, everyone.
Bye.